Cool. If we forward on, right, there we go. So you can see here now, right, price had been induced. This high had been induced, and then you can see the aggressive move down, the aggressive move away. Okay, so if there were breakout traders to the left that had buy stops set at this high, they would have been tagged in, and then price would have completely went the opposite direction. So if I just fast forward it for the sake of time, fast forward, price went in there, as you can see, tapped in, and then look, gone. What's going on, gang? It's your boy Ron's back again with another trade breakdown. So first things first, as you'll see from this breakdown, is that my trading has changed a little bit. It's elevated a little bit. I still, have the learnings from the ICT concepts, but from a bit earlier in the year, I've been learning the Liquidity Inducement Theorem concepts, or LIT concepts. A lot of you will know what that is, a lot of you won't. If you like it, I'll put the link in my bio where you can learn the content for free on their channel. Up until now, I haven't posted any real content about LIT or Liquidity Inducement Theorem concepts, mainly because it was paid content that I paid for, but they've now released the same course for free or they're releasing the same course for free on YouTube. I'll put a link in the description so you can see where you can learn it for free, all right? But that's why if you don't understand a few things that I'm talking about, then just go watch those videos and it will help you with my understanding of my trade breakdowns. But like I said, I always say I'm not a master, I'm still a student, but hopefully my trade breakdowns can help you on your journey as well, all right? So let's get straight into it. So the basis of trading is still liquidity. It's all about liquidity, right? So what we have here, this is the 15-minute. We're gonna go down to the 1 minute to show you how I took the entry and where I pretty much exited, okay? But just wanna break something down for you real quick. So first things first, what you got here is a, if we look to the left, we will start to the left, yeah? So we look to the left to get right? So as you can see here, this beast of a candle here, or a couple candles here, took out this low, right? So it induced this low before going to make a new high, and then we kept going, right? So from the week before that, we had price continuing making higher highs, but in doing that, it created, say, trendline liquidity. It's engineered trendline liquidity. So trendline traders were getting in, right? Seeing this trendline form. Eventually, price decided to just take out all this liquidity here, aggressively, didn't really give you a chance to get in on a higher time frame. On lower time frames, there would have been entries maybe on the 1 minute or 5 minute potentially, but in regards to getting in on the 1 minute, on the higher time frame, it's an absolute myth, right? But whatever, it's to do with taking the liquidity. So it took out this liquidity, and then we came lower here, and then took out this low, and then we took out this final low here before mitigating this inducement low. So as you can see here, when price took out this low to the left and then it went higher, this low that came down didn't mitigate this inducement low, all right? So this then, the way I see this then becomes a place of liquidity for me. When it comes back down, because this is yet to be mitigated, I then look at this as a liquidity point. Some people might try and, take their entries from this point. Maybe smart money traders might try and take their entries from this point, but this is always a no-no. This is always a no-no. You want to wait for liquidity to be taken first before getting into your entry, all right? So what we have here, so we can see here that price has come down and had mitigated this inducement low, right? And then you had this internal liquidity here, which, price went higher, then came down aggressively again. It's aggressively with these candles, took out this internal low and mitigated this inducement low to the left. And then we started creeping up, right? So this is the 15 minute. As you can see in the 15 minute, it looks like here we're fully bearish now, right? But price doesn't move. Price isn't that simple. It isn't going to just give you the move, obviously, without trying to induce buyers and sellers on both sides before going the direction that it wants to go in. So I was looking at this price on the 5 minutes. If I go down to the 5 minute, we can see here, okay, so a bit lower, right? So now we can see here that we've induced this low to the left, which is on the 15 minute, which is like a major / medium inducement, right? Pretty key inducement. And then we've had this internal low induced, okay? And then we've got these minor inducements that happening throughout that evening. You got a low, right? A low taken out, and then price goes higher. A low taken out, price goes higher. Equal lows here taken out, price goes higher. And it keeps happening again and again and again. So you can see here, these are the opportunities to get in. This is what, during I don't trade at these times anyway. This is like from, 7 p.m. UK time. right through Asia session, right? I don't trade those times, so it's whatever. However, this was London now. During London session, this is when I was looking at a trade. I was thinking, okay, where are we gonna go? So any trade that I take at this point here was always going to be a shorter time trade. The way that I trade anyway is more so like day trading. So I'm in and out on the same day. Every now and then I might leave a runner if I can, depending on the setup itself and the account that I'm trading off of, if it allows me to. But I was looking at this level and I was seeing, first of all, I was like, okay, this high over here, it's not doing anything, right? So it's not induced anything. It's not taking anything out as well. It's not taking any liquidity out. It's not induced anything. So I was like, this is a high I want to be taken. I want this high to be induced before I do anything. That's what I was looking at. I was like, when that high gets induced or taken out to the high, it might give me an entry to go lower. Okay. When I look for a trade, there's always a key or main point of liquidity that I'm looking to be taken out or induced before I take a trade. And for me in this instance, it was this high. So I was looking at this, but I also wanted other confluences as well. But what was beautiful about that morning on the 16th of October was the fact that also trendline liquidity was being engineered. All right. So these trendline traders were being induced, and maybe they'll enter in here and they'll get in happy thinking that they're gonna, have a nice trade on, right? So it's inducing these guys to get in. And then I wanted the breakout traders to be induced at this high before price to reverse. So what I was looking for basically was price to do this. I wanted price to go, let's get the right tool for this one. I wanted price to go up, down, mitigate, down. That's what I was looking for on that day, right? And that's exactly what we got. But let me break this down a little bit further for you. So in regards to my entry, I'm going to go down in the 1 minute. Cool. So you can see I might have to, you see the high to the left, which what I wanted to be induced. That's what this black line represents. And we had this trend line liquidity being formed. And again, you can see even within this trend line liquidity, you've got these minor inducements, right, before price goes higher, right? It happens all the time for continuation trades, okay? But I wasn't interested in these, obviously. So looking at this now, I was waiting for this high to be induced and then to give price to give me a break of structure or relevant break of structure once the high was induced. I don't want a break of structure just anywhere. It has to be at a key time or a key place after something else has happened, okay? So let's see what happens. Cool, if we fall on, right, there we go. So you can see here now, right, price had been induced. This high had been induced. And then you can see the aggressive move down, the aggressive move away, okay? So if there were breakout traders to the left that had buy stop set at this high, they would have been tagged in, and then price would have completely went the opposite direction. But what's key here? What's key here for me is that we had the relevant break of structure at this point, right? And it meant that price gave me an entry point to enter. So I'm looking at this now, I'm thinking, okay, brilliant. Price has induced, and let's see what happens after that. Boom. Okay. So what am I looking at here? Let's break this down a bit more for you guys. So price had induced the high, taking out that high, medium inducement to the left. Then it gave a relevant break of structure here, which was key in an aggressive way. And then it gave us a 1 minute entry to enter the trade. So in this instance, I wanted to take the trade based on the 1 minute final push up. Okay. So the 1 minute final push up. And then I wanted to set my limit, take the trade here. So 2.7 pip also stop loss. Then we wanted price to attack this trendline liquidity at least for a 9R, 10R. But I've marked out these lows to the left, and let me explain to you why for 12R. And let me explain. All right. So first of all, let's look at the entry. So inducement of the high to the left. You can see, you think this can get confusion for people because they're like, where do I enter? Because you've got all these highs and these lows being taken out But then it's like, where do I enter? But it's key to wait until a certain point is induced, and then you're entering on the mitigation of the inducement, right? You're entering on the mitigation of the liquidity sweep, right? So enter on the mitigation, and then you see how aggressive price is to move away. And if I go back to the 5 minute, we can look at the exit itself. Okay, so what I was looking at. So I knew that on the higher time frame, we had mitigated an inducement low. So I knew that we wanted to at least move higher up to take some kind of internal liquidity, at least, you know, to make it make sense, right? Because price wants to take liquidity on both sides. So I had entered here and I marked out these lows because you had relatively equal lows here, and you had this minor inducement with a lot of 5 minute imbalance that is yet to be filled. So I knew at this point, this could be the point where price could reverse, okay? So if I just fast forward it for the sake of time, fast forward, price went in there, as you can see, tapped in, and then look, gone, right? So price tapped in here, induced these lows, went into this imbalance zone, and then reversed and went and would have taken me back out again. But at this point, I was already completely out, right? But that's pretty much the trade itself. Hopefully you learned a lot from this trade breakdown. Don't forget to hit like, subscribe, and to drop me a comment as well. All right, God bless, take care, peace out.